Hey everyone, it's Engineer My Freedom here from Dividend Talk. We have been talking a little bit about our podcast, and sometimes we know that we cover topics on the podcast that maybe require a little bit more visual aids, particularly when we talk about our portfolio reviews or when we talk a little bit about maybe companies that we are reviewing, or when we analyze, say, the cash flow statement or the balance sheet. Some of these, while our listeners do generally respond well to these in podcast format, we do realize that maybe our YouTube viewers might not really be able to follow as well. So decided to try and experiment a little bit, so bear with me. We might do this YouTube channel concurrently with the podcast, so we'll still post the audio from the podcast, but I'm going to try, when time permits, to go in and maybe provide a little bit more visuals. European DJI does a fantastic job editing at the moment. He also has his own blog and YouTube channel, so we can't expect him to also try and edit the YouTube version as well, so I'm going to try to take up some of that slack. So I decided to try and start with an easy one to kind of ease myself into this whole YouTube business, and I'm just going to go over my portfolio for November. So I usually write a blog post on this, which I will do. It just takes a little bit more time, but I will just go through my spreadsheet, how I track companies, and then show you what exactly my portfolio looks like. So you can see on the screen my portfolio value as of the 30th of November 2021 was around 45k, and I mean, I'm quite chuffed with that. I started this dividend investing journey back in December 2017, I believe, by investing €50, and I just remember how nervous I felt. I just wanted to get used to buying companies and having a brokerage, and it was a little bit overwhelming at the time. But over the years, I've grown. I've learned loads from. To be honest, this community has been fantastic. I'm still always learning, but I'm a lot more confident now, and I can start putting in more cash into my portfolio. Now, I must say that this is not my whole portfolio. I have got other portfolios as well, which is not just dividend income, but I keep that separate. I might track that or maybe show that someday, but I'm focusing purely on my dividend accounts for this channel. So you look at my top 5. If you see on the left hand side of the screen, you have my portfolio holdings, and it lists all the major ones that I have. So my top one is Unilever, which is nearly 10% of my portfolio. Oil 3 is up there with 8.2%. Royal Dutch Shell, we all know I love Royal Dutch Shell, but they are 8.1% of my portfolio. Microsoft is next at 7%, and Realty Income make the top 5 at 6.7% of my portfolio. So you can see I have a nice mix between European companies and American companies, and that's kind of what I like. I'm not overly happy that one company is making up 10% of my portfolio. So that is something that I will be changing over time, but I must stress I'm still in the accumulation phase of my portfolio, which means I'm adding to my portfolio whenever I see value in a particular company. It just so happened Unilever have been around that value range for quite a long time, so I've been adding to them. Going forward, I think I have near enough a full position in them, so I've no need to add to them, and I'll start maybe beefing out some of my other positions, particularly someone like Lockheed, for example, which is still quite small. Johnson & Johnson is small, as well as AbbVie. You will notice also I have Alibaba in there. Alibaba is not a dividend company. They are just a gamble that I'm taking at the moment that is not really working out. But I bought them at about $162, I think, in around that range. And I plan to get out if they ever get back up around the $200 mark. So since I bought them, they've plunged. As you can see, it is 5% of my portfolio, so it's quite meaningful, but it's a long-term play for me. So I'm happy to sit there and wait. I don't mind owning that company. They have got great fundamentals. There's a lot of fear in the market at the moment, so it's probably a good time to buy them if you believe in the company. But honestly, I know there's fears of delisting and all fears from China, but I think the fundamentals are quite strong. So I'm confident, and I'm going to hold these out until they get around the $200, maybe $220 mark, and sell them. So I spoke briefly about my split between European companies and US companies. So this is something that I actively track. European companies make up close to 34% of my portfolio, whereas US companies make up the remainder. I have these closed-ended funds as well, which are all American as well. I basically use these instead of ETFs because I think I spoke about this before on the podcast. I've certainly wrote about it in my blog, but in Ireland you've got ETFs, and we have this incredible rule where you have to pretend to sell every 8 years and pay taxes on the gains that you would have made if you sold, even if you don't sell the ETF. And honestly, that rule kind of annoys me, so I stay away from ETFs, and I don't want the hassle of actually having to make my returns on ETFs every year after that. I'm quite happy with my dividend stocks. I still make my returns on them, but it's a lot more straightforward. I can see exactly what I got. I don't have to pretend I sold and calculate gains like that. So that is why I have this small CEF portfolio. And I must admit, I'm quite new to CEFs. There's still a large learning gap there for me. So I learn best by doing. So I'm starting to add small. I'm following accounts on Seeking Alpha, just to gain a little bit of exposure. But you can see it's only it's 4% of my portfolio, so it's very, very small. I think I take €100, maybe €200 a month when I'm investing and investing there. So do not take any advice from me about CEFs at the moment, because as I said, I'm only learning myself. Looking at the sector allocation, I am super heavy in consumer staples. This is far more than what I'm comfortable with long term, but honestly, that is just where the value has been for me at the time of buying. So I tend not to try and focus too much. I don't let these dictate me at the moment when I am buying something. If I see something that's value, I will try and buy it. But long term, I would like this to even out over time. I don't want to have 39% in consumer staples, at most maybe 15-16%, and I still need to beef out some of my other positions, particularly in financials, industrials, and even materials. I don't think I have any materials in my portfolio, so I need to beef them out, but that will come over time. This is what would I say, it's a work in progress. It's a long-term plan, so I will get there. Over the next 10 years we should see lots of different events happen and cycles happen where other industries might become a little bit more value play, and I'll start investing a little bit more into them. So at the moment, as I said, I'm not too concerned, but it is something I will certainly be keeping an eye on over the next coming years. And the last two things that I track, one is portfolio by currency, which nearly mimics what I have in terms of my investment categories. So that's US dividend stocks, European dividend stocks. So the bulk of my income is in US dollar, which does have some currency risk. Sometimes that will work in my favor, sometimes it won't, but it is going to average out over time. And then my investment accounts, I use Interactive Brokers and the Gyro. I honestly love both of them. They're both easy to use. For novices like me, they were a doddle to get used to. But I'm starting to use Interactive Brokers a little bit more lately, just because their offerings are a little bit wider. And they also have the ability to do option trading on American companies, something that the Gyro doesn't allow me to do. And I have loads of other stuff on this sheet. I don't actively track these. They've been on this. I don't know if I mentioned this at the start, but this spreadsheet was not designed by me. I will put a link below to the guy and the blog that I got it from, but it's called A Measure of a Plan, and he's done a fantastic job at this. Honestly, it's an incredible resource to have. The amount of time it takes to build something like this is quite large. I have adapted it. I have put in my own few bits and pieces, but I mean, I wouldn't have been able to come up with anything nearly as good as this without taking his template first. So I will link to it. If you want a copy of it, please go and download it. Support that blog as well. Read the blog, donate if you can. I mean, he's put a lot of effort into something like this, and it's much appreciated. And then the last bit I have is the dashboard that I use on my blog and podcast. So you can see that I made 2 acquisitions in November. Vitaris, which I spoke a little bit about on the podcast, and I know Ian Loplock is a major fan as well. I've gone in a little bit heavy on them in terms of option trading as well. I might talk about that later. And I've also bought then a small part in ASG, which is Liberty All-Star Growth Fund. I think I put about $100 or $200 in that. Again, ignore my CEFs. I'm noting here because I still get dividend income, but until I become a little bit more comfortable, I would not even look at any of them that I say, because they could be a load of trash. In November has been quite a good month in terms of dividend income. As you can see, it's close to €130. Now I have to say this is including tax. So I include my withholding tax here, which is tax that comes at source, but I also include then the tax at my marginal rate. So depending on where you're from, you'll have different tax laws. I just know in Ireland, the Republic of Ireland, we have tax laws where we pay dividend income at our marginal rate. So there's 2 different rates depending on the band that you're in. And at the moment, I'm in the lower band, which is quite good in terms of tax that I pay in dividend income. And if I ever move up to the higher band, I might have to reassess how I allocate my portfolio. The portfolio yield is quite high. It's 4%. I aim for about 3.25%, which is more than enough. If I have a portfolio yield of about 3.25% and I grow that account by 6-7% a year, I should, and I say I should, reach financial independence within the next 8 years. So it was a 10-year plan. It's probably going to take me 11 or 12 years, but I mean, I'm still quite young. maybe I'm old to some of the listeners, but I'm still quite young, and I hope to be able to give myself the chance to retire in my early 40s. So I'm well on track to do that, and having a 4% portfolio yield is certainly helping. I've spoke about Unilever and my largest sector already, but what is also quite surprising is all 3 have 17% of my dividend income. Now that is quite large, and the reason actually that they are so large in my account is because I do use all 3 for the wheel strategy, which is an option trading strategy where I sell cash secured puts and covered calls. But to do that, you need 100 shares. So I have 100 shares of all 3, which they pay, I think, they have an 8% dividend yield. So they have a high starting yield as it is. So they pay me quite a handsome amount. Over time, though, I won't be adding any more all 3 to my account. So that will diminish over time and should level out then with other companies. So that's just a quick look at my portfolio and how I track them. If you look at my trade log, I have dividends. The dividends I received from this month, so I earn dividends from AT&T, Blackstone, a couple of CEFs thrown in there, Verizon, Texas Instruments, Realty Income, which just pay you every single month, AbbVie, and also British American Tobacco. So I earn quite a lot. Look, 128 is quite a large amount for someone who started investing a small amount of money. Obviously, my goal is to live off this, and I can't live off €128 a month, so I still got quite a bit to go, but I am quite chuffed at how it's progressing at the moment. I did sell Verizon. I had 10 shares in my portfolio, and honestly I had no plan on adding any more. I have 100 units of AT&T as it is, so I don't really need any more of Verizon, so I just sold them. And I also sold 100 shares of Ahold Delhaize, but that was part of the wheel strategy that you've heard me talk so much about, where I was assigned, I think I sold them at $28. Unfortunately, they were, I think about 30, or sorry, not dollars, euro. They were about €30 at the time I was selling, but I bought these guys at about €21. So it's not as if I can cry over losing money. I just could have made a little bit more if I was to sell them, not in this wheel strategy. But that's the risk. That's the risk that I take. So there you have it, my first real YouTube video. Let me know what you think. Is this something that you want from us? As I said, I will try and include more visuals from the podcast that we do, particularly around stock reviews, and I'll throw in some of my own videos as well. I hope you liked it. Please subscribe as always to our Facebook channel. It is growing. It's getting quite active there, and if you feel like it, drop by my blog and drop me a comment. See you later.